Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar, the news you need to know for the week ahead in Bitcoin. Today is Monday, April the 12th, and we have a very big week for Bitcoin and crypto markets in general. The big focus this week is going to be on Coinbase, whose shares start listing on the Nasdaq this coming Wednesday under the ticker COIN. Coinbase posted some really blowout numbers for earnings last week, and we're going to be comparing those numbers to those of Goldman Sachs and see how they fare and what implications we can draw, if any, from the Coinbase listing as to how it can impact Bitcoin and crypto markets. We're also going to talk about big banks which are eyeing the Bitcoin futures markets right now. JP Morgan published a report last week titled, "Why are the Bitcoin futures curves so steep?" or "Why is the Bitcoin futures curve so steep?" Very big implications from that, so we're going to be diving into that as well. And lastly, we continue to see signs of asset prices in the US heating up. This time is home prices. Bloomberg reported that houses are getting sold within a week of getting listed, and prices are soaring. So we're going to be talking about that too. Lots to cover today. Huge week. Grab your coffees. It's going to be a good one. So starting out as we usually do with Bitcoin, we see that last week, after flirting or getting within $500 of its previous all-time high, it could not overcome the selling pressure north of $60,000, and it settled the week at $59,979, up 3.04 cents for the week. Now, while Bitcoin was unable to cross over that $60,000 mark, last week's close does mark Bitcoin's highest weekly close ever. So that's a very interesting feat. Now, we're going to talk about momentum around the crypto markets in general, which seems to continue building. Last week, we saw a report that the cryptocurrency markets, basically in total market capitalization, topped $2 trillion for the first time last week, as Ethereum, and we're going to pop up that chart here, reached a new all-time high of its own, closing the week up at $2,148, up 3.49%. So we see again Ethereum comfortably closing over that important $2,000 mark. Now, as we mentioned at the beginning of the episode, all eyes of the industry are going to be on Coinbase this week as its shares get listed on the Nasdaq and start trading this week on Wednesday under the ticker COIN. So to touch briefly on Coinbase, they released their first quarter 2021 earnings numbers last week, and those were a sight to behold. Some highlights from those from that report. Revenue for Coinbase for first quarter of 2021 was $1.8 billion. That's up from the same period last year of $191 million. So an increase of over 900% from first quarter of 2020 to the first quarter of 2021. Net income for the same period came in at $730 million. And other impressive numbers from that report is that Coinbase now has 56 million verified users. It has the trading volume for the quarter was $335 billion, and it has $223 billion worth of assets on its platform. This is really meaningful because, as we covered recently, the total market capitalization of crypto markets in general is $2 trillion. So Coinbase holding 200 billion, north of 200 billion, means that it's holding just over 10% of the total market capitalization of crypto assets. An impressive number. Now, to put those impressive numbers in context, according to the Wall Street Journal, these numbers set up Coinbase for a potential valuation of $70 billion at the time of listing this Wednesday. This would imply a roughly 25 times price to earnings ratio based on the earnings to the value of the market capitalization of Coinbase. Now, for context, Goldman Sachs is expected to post results for the first quarter of 2021 as well this week, and it is expected to post $3.2 billion worth of net income or earnings. And it currently trades at a market capitalization of $113 billion for a current price to earning ratio of 13.37 times. One difference, so as you can tell, there's a big difference between the price to earnings ratio from Goldman and Coinbase. Coinbase at around 25, Goldman at around 13.37. One key difference is that Goldman's revenues are growing by roughly 20% year over year. So first quarter 2021 versus first quarter 2020, revenue has grown for about 20%. whereas Coinbase revenues are growing by more than 900% in that same period. So we're going to be diving more into this in our What's Ahead section later today. Now, moving elsewhere into asset prices into the US, we see here the article on the screen, as we mentioned on the title as well. Signs of US asset pricings heating up continue to surface. Last week, Bloomberg reported that almost half of the homes in the US are selling within 1 week of being listed, which is a record pace. And as you can tell from the headline, essentially home prices are soaring, again, due to the lack of supply and the heated demand. Now, elsewhere in the macro world, we saw that Lynn Alden from Lynn Alden Investment Strategies posted a very interesting graph last week, pointing out that many economic indicators and corporate earnings for the periods between March 2020 and March 2021 can provide some very impressive year-over-year numbers on growth on a percentage basis. And this is given the low base effect that they have from March and April 2020. So she points out that this is already happening in the producer price indexes for the US. That's the graph you have behind your screen right now. The purple line shows the producer price indexes, and the orange line shows the consumer price indexes. As you can see, producer price indexes already rocketed in March, and Alden believes that there's a good chance that the consumer price indexes will follow suit in the month of April. Now, switching gears back to Bitcoin for a second and popping up the options markets and what they're showing us, we see that there is, looking at the Bitcoin call options, we see a very interesting block of open interest here in the $80,000 strike price for the call contracts. Again, that's 7,000 contracts. And as you can see from the essentially what is open in other contracts, it's usually between 1,500 and 2,000 contracts. So 7,000 contracts is meaningful and quite over the sort of standard volume that we see across other contract strikes. On the put side of things, we're seeing two interesting blocks here at the $52,000 and at the $50,000 level for the put contracts. And now, briefly touching on the funding rates for perpetual futures, we see that across major exchanges, perpetual funding rates are significantly over their 30-day averages. So this could be a sign of potential volatility ahead. And lastly, the April futures contract is trading at around a 10% annualized premium from spot prices right now. Moving over to the S&P 500, we saw that U.S. Capital markets moved significantly higher last week. The S&P was higher by 2.12% at 4,124 points. We also saw that the Dow Jones Industrial also made a fresh new all-time high of its own, up 1.95% at 33,800 points. And lastly, we see that the Nasdaq was the big winner last week, again up 3.48% in the previous week. So going back to the S&P 500, a couple of interesting things to note in the macro world is, as we covered last week, the VIX has essentially closed the gap, and it's right back down to what you could call pre-pandemic levels. It's really back at its pre-pandemic range. So this is something interesting. And additionally, if we look at the yield on the 10-year note, which is something that we've been following for quite some time, and it was the reason markets were getting a little bit jittery a while back. If we take a look right now at how that's been evolving over the last little bit, we draw a line on the yield curve, and we see that it's essentially been flat for the last 4 weeks, 28 days, which has given some comfort to the markets, as you can see from the dropping VIX and the rising indices. Now, bringing it back to the S&P 500 chart, as we mentioned, we're heading into first quarter earnings reports for most U.S. capital markets. This is important. According to data from Bloomberg and Deutsche Bank, I'm just going to pop that up here. According from data from Bloomberg and Deutsche Bank, the first quarter of 2021 earnings period in the S&P 500 has seen the largest upgrade to earnings estimates going into any earnings season over the past 10 years. What this means is that the analysts are expecting really positive numbers out of corporates reporting this week or across this period, and positive earnings may be a catalyst for the market. Now, on that front, the big banks kick things off this week with JP Morgan, Goldman Sachs, and Wells Fargo reporting on Wednesday. Thursday, we get Bank of America and Citigroup. And Friday, we get Morgan Stanley. So big earnings week coming up for U.S. equity markets. We'll definitely pay attention and report any relevant updates through here and our social media accounts. Moving over to gold and just putting it up here on the weekly chart, we see that before going into gold, actually, this is the last week bar for gold. But before going into that, let's look at the dollar last week. So the U.S. dollar actually had a significantly down week last week, down 0.91%, which boosted equity and commodity prices as we saw. However, gold, going back to the chart, closed up by only 54 base points at $1,744 an ounce. This is interesting. And I also wanted to highlight that there was an article from, there was a quote from the CEO of Goldman Sachs, who was actually doing an interview at CNBC with Squawk Box. And his quote was very interesting. He said, "I think Bitcoin is on an inevitable path to have the same market capitalization and then higher one than gold. It's how fast adoption is happening. Adoption is happening faster than I predicted." End quote. So to put these into perspective, and again, we continue to see the type of articles. Just looking here for the article that had the gold. Yeah, so we continue to see these Bitcoin versus gold articles coming up or popping up in mainstream media. And just to put this gold versus Bitcoin comparison into some context, for Bitcoin to reach the market capitalization of gold, it would have to move or have to be valued at approximately 9 times what it is valued today, which means roughly around $500,000 per Bitcoin. So again, big gap between these two markets, and it's very important to keep noticing this dynamic between the two. Moving over to the FTI DeFi index, we see that the DeFi index came under some selling pressure last week, being down 1.59% for the week, compared to, again, Ethereum, which was up 3.49%, and Bitcoin, which was up 3%. So between Bitcoin, Ethereum, and the DeFi index, DeFi was the one that came under the most selling pressure last week, ending the week lower. However, given the price breakout, an impressive price breakout that it had the week prior, up 22.5%, the current price action or the price action last week could be attributed to some profit taking. Now, in stablecoin news, which was a pretty big development last week, China has moved on to the second phase of its central bank digital currency trials by expanding the digital renminbi to a new region of the country. Now, this is important. Central banks across the world are looking at China, which is a pioneer in central bank digital currencies right now. If successful, this could have meaningful implications, both economic and geopolitical. So definitely something or a trend that we'll keep our eyes out on and see how it develops. Moving over to our Bitcoin mining difficulty commentary, we see that not much has changed on this front since last week. The next difficulty adjustment is set to kick in this coming Thursday, should bring difficulty up to a new all-time high of 23.59 terahashes. Looking at the mempool, which is the graph that you have behind your screen right now, the size of the mempool continues to trend downwards, which is definitely what we'd like to see. However, transaction times, as you can see, like the levels are still quite elevated, as similar to say October of last year. And transaction times and fees should remain similar to what they were last week, again, so that you can plan accordingly. So as always, we leave you with what's ahead for the week. Checking in on the macro indicators for the U.S. economy, the jobs numbers that we got last week, non-farm payrolls, were very impressive. The report said that 916,000 jobs were created over the last period, and this blew past analysts' median expectations of $660,000 jobs created. These are signs that the U.S. economy continues to pick up steam. With another interesting note from this week was that CEO of JP Morgan, Jamie Dimon, predicts that there will be an economic boom that could easily last until 2023. He cites that there could be euphoria around the end of the pandemic. So interesting that these signs continue to mount. Now, we don't usually show charts on these what's ahead section, but we thought that we wanted to share a couple of very interesting ones that came out this week. So Interestingly, another interesting note that we saw this week was that Christopher Wood, he's the head of equity strategy at Jefferies, basically said that Bitcoin exchanges are now holding less than 2 million Bitcoin, with this number declining every month. This means that there is less Bitcoin supply to potentially satisfy demand. This observation is consistent with the chart that you have behind your screen right now, which shows the count of inflow addresses across the exchanges that CryptoQuant tracks. Now, as you can see from the chart behind you, the time when most addresses receive a Bitcoin inflow across exchanges coincides with previous market cycle tops. Now, interestingly, BTC inflow addresses have been going down recently in light of this recent rally. Now, again, to bring it back to potential headwinds, the proposed regulation out of the United States to regulate digital asset transactions continues to be the potential curveball for crypto markets. Now, as we've covered here, the commentary period for this proposed law ended 2 weeks ago, and updates on this regulatory front could surface at any time, and they could significantly impact markets. Again, to chat on something very interesting, as we have been covering, Coinbase is going public this week via a direct listing. How will this impact markets? Well, a direct listing is a little bit different than an initial public offering in that through a direct listing, the company is listing shares of existing shares, so shares that belong to existing investors already. It's different than an IPO where the company creates new shares that basically get sold. Why is this important? It's important because this type of listing creates a liquidity event for some of Coinbase's early investors. These investors may use some of their new liquidity to invest in the sector or in Bitcoin itself. They may also use these funds essentially to invest in the next generation of companies that are building in this space. Now, the key win for this industry is that even if the Coinbase listing does cannibalize Bitcoin and crypto assets, and in some way it will, the overall effect will still likely be very positive, as the listing can bring brand new investors that had not previously invested in Bitcoin to this space. This will add fresh new capital to the industry, and if Google search trends are any indication of retail interest, then Coinbase seems well poised to do so. On the back of your screen is the levels of search trends, or the search trends for Bitcoin as of recently, and we see that just as recently as February 13th, they were hitting 100%, and they're currently at around 74% from their historical highs. Now, lastly, we saw another very interesting report coming out of JP Morgan this week, which it was titled, "Why is the Bitcoin futures curve so steep?" Now, the report highlights Bitcoin's rich annualized futures premiums, and we wanted to share a very interesting quote from this report, which was trying to decipher why these future premiums are so high on an annualized basis. For that, I'm going to put in the background the annualized return of the Bitcoin futures carry trade. And I'll explain in a second once the quote is finished. So the quote reads, "Why has such attractive pricing not simply been arbitraged away? One could blame perhaps counterparty repatriation risk in unrelated offshore markets, but certainly not on the CME. In a market with rampant bullish sentiment and heavy retail involvement, it is tempting to simply blame demand for leverage. And that is certainly true to some extent. However, there are also some more idiosyncratic but equally important aspects of how these contracts are designed in the context of market segmentation that are specific to Bitcoin and likely explain a substantial fraction of this richness." To put it into plain layman words, they're trying to basically determine why these futures essentially carry such a sustained premiums over the spot prices. The chart that you have behind your screen shows the annualized premiums implied in a quarterly futures curve for Bitcoin over time. This shows that they have been consistently around 20% since early March. So again, very impressive numbers. So as always, we've covered a lot, and as always, is a big week coming up for the space. We'll continue to keep you posted right here through the Bitcoin Economic Calendar and through our social media accounts at Hodl with Lennon. If you learned something today, if you like this show, I welcome you to subscribe to our channel, like the show, share it with your friends. If you don't yet have a Ledin account, I welcome you to check out ledin.io and learn how you can start earning 6.10% APY on your first 2 Bitcoin and 12.5% APY on your USDC or digital dollars. Thank you, everybody. It's been an amazing one, and take care. We'll see you next week.